Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the financial statements of companies to see what is really going on behind the curtain. And today we're peeling back the layers on Ambow Education Holding Limited. Their annual report is out. And let me tell you, it has got some twists and turns that are more interesting than a surprise pop quiz. Stick around as we decode this filing to see where Ambow stands. Before we jump in, if you love getting these kinds of unfiltered insights into company filings, make sure you hit that subscribe button. And hey, if you want to chat about finance and decode more with fellow enthusiasts, join our Discord community, link down in the description. So Ambow Education Holding Limited is presenting its annual report for the fiscal year that ended on the 31st of December 2025. This is the big one, the year-end wrap-up. They are a Cayman Islands holding company with operations primarily in the United States, so that dual nature is something to keep an eye on. Now, they tell us a bit about their history starting back in 2000. They used to be heavily in China, but they've shifted their focus entirely to the US since 2022, selling off their China operations. This shift is significant as it means their entire growth story now hinges on the American market and their new AI-driven initiatives. What is really interesting is their industry focus. They're operating at the crossroads of hybrid communication, digital events, and education technology. Think about that. Hybrid communication is about blending physical and digital spaces, and that is exactly what their main product Hybrew aims to do. The demand for these solutions is booming, driven by our increasingly connected world. One of their key US assets is the New School of Architecture and Design. It is a pretty respected institution focusing on architecture and design, and it is accredited, which is crucial for its operations, especially for accessing federal student aid programs. But the real star of the show for them and their future seems to be Hybrew. This is their AI-powered phygital solution. Phygital is a cool word for physical plus digital, and that is what Hybrew is all about, seamlessly merging online and offline experiences. They launched it in 2023 and have been expanding its offerings with things like AI conferencing and knowledge capture tools. This shows a clear strategy to move beyond traditional education into broader tech solutions. Let's look at how they are structured in the market. Their American depository shares, or ADSs, trade on the nice American under the ticker symbol Ambow. Now something important happened on the 20th of February 2024. They changed the ADS to share ratio from 1 ADS representing 2 Class A ordinary shares to 1 ADS representing 20 Class A ordinary shares. This is like a 1 for 10 reverse split for the ADSs, but no change to the actual shares they represent. This kind of change can sometimes be a signal about the company trying to manage its stock price and market perception. The market value of their non-affiliate stock seems quite small at around $4.8 million as of June 2025. This suggests that Ambow is a relatively small cap company, and that can bring its own set of risks and advantages. Interestingly, they're classified as a non-accelerated filer and a smaller reporting company. This means they have fewer regulatory reporting obligations, which can be good for them, but also means less scrutiny for investors. Now let's talk risks. Companies always have risks, and Ambow's are pretty extensive. They worry about attracting enough students, a lack of qualified educators, and the potential impact of AI adoption. We all know AI is a double-edged sword. It can drive growth, but also presents challenges if not managed correctly. They also mention competition could lead to loss of market share and revenues, which is a standard concern for any company. And then there are the legal battles. They were involved in a significant lease dispute with their landlord, which they settled in June 2025 for $2 million. They also face a lawsuit from a former president alleging breach of contract and fraud. These kinds of legal issues can be costly and distracting. Let's get to the numbers, the real heart of this filing. In 2025, their total net revenues were $9.5 million, an increase from $9.4 million in 2024. This is a very modest growth of less than 1%, so not exactly a hyper-growth situation. The growth primarily came from their Hybrew business, offsetting a decrease in revenue from New School. Their cost of revenues actually decreased slightly by 2.3%. This is a positive sign, as it implies they are managing their direct costs better, especially as Hybrew revenue is growing. Gross profit increased from $5.0 million to $5.2 million, and their gross margin actually improved from 53.1% to 54.8%. This is good news. It means that for every dollar of revenue, they're keeping more of it after paying for the direct costs of providing their services and products. The improvement here is largely tied to the growing contribution of Hybrew, which is great because it is a higher margin business. Now, operating expenses are where things get really interesting. Total operating expenses decreased by a significant 10.5% from $5.7 million in 2024 to $5.1 million in 2025. This is a big deal, especially with revenue basically flat. The main driver of this reduction was a whopping 20.9% drop in general and administrative expenses. They attribute this to lower rental costs due to relocation. That is a smart move, cutting overhead like that. However, research and development expenses increased by 50%, going from $0.4 million to $0.6 million. This is understandable given their focus on Hybrew and AI technology. They are investing in the future. And the bottom line, net income jumped from $300,000 in 2024 to $1.4 million in 2025. This is a massive improvement and nearly 4.5 times increase. This surge is largely thanks to the substantial drop in operating expenses, primarily from those lower rental costs, and a significant gain of $1.5 million from settling that lease dispute. Looking at cash flow from operations, things are a bit shaky. Net cash provided by operating activities in 2024 was $1.6 million, but it plummeted to just $137,000 in 2025. This is a major red flag. While they're making a profit on paper, that profit isn't translating into operating cash effectively. The gain from the lease settlement significantly helped their net income, but it is a one-time event and doesn't reflect ongoing operational strength. Their total assets grew to $20.8 million from $17.4 million in the prior year. Liabilities also increased to $12.5 million from $10.6 million. The equity grew to $8.3 million from $6.7 million. The company is growing its balance sheet, which is normal, but the operational cash flow is a concern. Now, for compensation for Jin Huang, their CEO, acting CFO, and chairwoman, her total compensation remained flat at $150,000 in both 2024 and 2025. Chiao Ling HSU, their Kuo and president of Newscool, also saw flat compensation at $150,000. James Bartholomew, who joined as president in May 2025, received about $60,000. This seems reasonable given the company's size and financial performance. The company has granted stock options and restricted stock. In 2025, they granted over 3.3 million stock options with an average exercise price of about 13 cents. This is a fairly common way to incentivize executives, but the exercise price is very low, which is worth noting. The market value of unvested shares for executives is minimal as of the filing date. Let's look at their balance sheet. As of the 31st of December 2025, they had cash and cash equivalents of $831,000 and restricted cash of $7.3 million. The restricted cash is primarily set aside for US Department of Education requirements and to back lines of credit, which makes sense given their educational operations. Accounts receivable is around $2.3 million with an allowance for credit losses of $607,000. This allowance has increased significantly and it is notably higher on their new Hybrew sales, indicating some early caution on collections there. Their financial performance paints a mixed picture. While net income is up significantly thanks to that lease settlement gain, their core operating cash flow is down substantially. This highlights the importance of that lease settlement in making their income statement look good. The increase in Hybrew revenue is promising, but it is not yet enough to counteract the struggles in their educational programs. Their auditor Guangdong Proudon CPA's GP noted the allowance for credit loss as a critical audit matter. This means they spent extra time and effort scrutinizing this area. They mentioned that because Hybrew is a new business, the company lacks historical loss data, making the estimates very judgment heavy, relying on external data and assumptions. This is a key area to watch. So what is the story here? Ambow is transitioning. They are betting big on their AI phygital platform, Hybrew. This is where their future growth is supposed to come from. The shift away from China and the focus on the US market with technological innovation is a strategic pivot. Financially, the income statement looks better due to a one-time gain and cost cutting, but the operational cash flow is a serious concern. It suggests that while they are making sales, the actual cash isn't coming in as smoothly as they'd hope, likely due to the infancy of Hybrew and perhaps ongoing pressures in their education segment. The company's direction is clear, innovating in education technology, but the execution and financial health of this pivot remain to be proven. The increasing R&D spend is necessary, but it is draining cash that isn't being generated operationally. The legal matters and debt levels are manageable for now, but add to the overall risk profile. In my opinion, Ambow is a company in the middle of a significant transformation. The Hybrew platform has potential, but it is still very early days. The increase in net income is encouraging, but it is heavily skewed by a non-recurring settlement. The real test will be if they can translate revenue growth from Hybrew into strong positive operational cash flows and manage their educational segment effectively. That is our deep dive into Ambow Education Holding Limited's latest filing. What do you think about their Hybrew strategy and their path forward? Let us know in the comments below. If you found this analysis helpful, give it a thumbs up. It really helps the channel. And don't forget to subscribe for more deconstructions of corporate filings. And remember to join our Discord community, linked in the description, where we break down these ideas further. Thanks for watching, and we'll see you in the next video.